This was predictable from day one back in 1971 when we got rid of the last vestiges of the gold standard. And it took a really long time to get here, but we have arrived at this really predictable place where the Fed's in a box, its tools don't work anymore. Nobody trusts the other guys who are in charge, and politics are becoming kind of warfare by another name. So we're on the verge of a civil war in a lot of aspects in the U.S. and in a lot of places in the rest of the world. And I don't have the slightest idea how this plays out exactly.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 29th through May 6th, 2024, while supplies last. First, we feature 2023 1-ounce South African Silver Krugerrand at just $3.10 over spot. Next, backdated 1-ounce gold Australian Kangaroos are only $59 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend John Rubino from rubino.substack.com. John, thank you so much for joining us today.
Hey Elijah, good to talk to you again.
Well, it's great to have you back on, especially as we're seeing today the jobs numbers come out. We're recording this on Friday, and they were less than expected. And it's typically should be bad news, but people are now thinking, well, if the economy is slowing, then maybe the Fed is going to cut rates. Your perspective on how it seems like, as you stated, it seems like all news right now is good news for the markets.
Yeah, this is a really good illustration of the whole Mr. Market is a manic depressive theme, which you hear a lot in the investing world. Basically, what that means is that the market, when it decides the world is a good place and stocks should go up, it interprets all news as good news. And then vice versa, when Mr. Market is in his depressive phase, all news is bad news. And lately it's been good because you can see that in the jobs reports. The last few jobs reports we've had before this one were pretty strong. And the government was making up the numbers and everything, of course, but you don't find that out until the third revision after the headline. But big headline jobs numbers were coming out, and the stock market would go up on that announcement based on the idea that it meant that the economy was strong and we would have rising corporate profits, and that's good for stocks. So now we get a weak jobs report, and Mr. Market interprets that as, oh, great, the economy is weak and we'll get lower interest rates, which is good for stocks. So stocks are rocking today after that report. And basically, this tells you more about the underlying psychological tone of the market than it does about jobs or the economy or anything. It's just that right now investors have been taught to buy the dip for such a long time that especially when stocks have corrected a little bit as they have lately, they interpret that correction as a buying opportunity. So they look at all news that comes out as validating their desire to buy stocks. And so the stock market goes up on whatever news it is that comes out. So in that sense, the news is not very meaningful, but the tone of the market is pretty meaningful because it tells you what an awful lot of traders out there intend to do going forward, which is to buy the dip.
And what changes that mood for the markets? Do you see that changing anytime soon? And if so, what changes that?
Oh, yeah, it absolutely changes. And usually it's a buildup of data that contradicts the underlying preconceptions of traders. In other words, if enough bad stuff comes out, then even the guys who are, congenital buy the dip traders will get scared, and they'll pull in a little bit. They'll stop buying the dip. Stocks will fall harder, and then that will validate the idea that things are actually much worse than anybody thinks. And you'll get a sell the dip or a sell the rip market. In other words, when stocks go up, people will be very happy to take profits, and that'll give you a bear market at some point. And that's coming because there are an awful lot of kind of under the surface statistics now that point towards a weaker economy, which That's right. We'll give you weaker corporate profits and weaker stock prices. And, I don't think it's going to be very long before we hit that point, or we hit the point of recognition on the part of the markets that that's where we are. Because, right now, the predictions for the current quarter's GDP is like 1.5% growth versus 3% in some for the previous quarter. So we're already trending down. We've got interest costs spiking for almost everybody that has any kind of debt, which is a thing that slows the economy down. Consumer debt is soaring. We're up above $1 trillion in credit card debt. A growing number of people are carrying ongoing balances that they're paying 20% plus on. So there are a lot of stories like that out there. And in the aggregate, they will give us weaker economic growth going forward. And that normally leads to an equities bear market. So that, that's what we should expect pretty soon. And it's, as far as that goes, nothing really unusual. That's just the way markets and economies work. And we're probably heading into a down cycle. Now, what happens once that down cycle gets going is where it's interesting. But the fact that we have a down cycle coming, or a downward part of the cycle coming, shouldn't be a surprise to anybody, and shouldn't be anything that really shakes your confidence in your general sense of the world. A recession shouldn't change how you view the overall economy, because recessions just happen. And if we've got one coming, so be it. Trade it. You might want to short stocks or something like that. But it's the Fed's reaction to that recession that's going to tell a big tale here going forward.
And mentioning the Fed's reaction to that, I mean, we did just have the Fed meeting as well this week, where they're saying, we'll keep interest rates steady. So what do you think Fed policy will be during this economic downturn?
Well, it's really important to understand that the Fed is totally clueless. Like, remember 2 years ago, inflation was transitory. And then it was not quite transitory, but it's still going to go away. And then 3 or 4% inflation is not that bad after all. And pretty soon it's going to be 3 or 4% is our new target, and that's because they're working with flawed models. They really never understood basic economics to begin with. They're just guys who got political appointments, or economists who got theoretical degrees in economics, which really don't do you any good in the real world. So they're going to flail around. That's the short answer to your question. They're going to do things that in retrospect look kind of stupid, but in the moment is the best they can come up with. And it's going to be skewed towards easy money, because that's the real tool that they've spent their careers finding success using in a credit super cycle. But I think it's arguable that we're leaving this credit super cycle that started in 1971 when we went off the gold standard, and entering something that's a lot darker. So the Fed, think of the Fed as kind of those Mr. Market stock traders who are now in buy the dip mode. They've got the idea that they can fix things with easy money because it's always worked in the past. Decent chance it doesn't work this time. And that's where things get really interesting. When the old models are proven false, the old tools are proven ineffective, and things get very, very tumultuous. And I think that's how we'll come out of the next recession, thinking we can fix it, but finding out we can't.
And how do we maybe remain level-headed during this crisis? I know you've talked about how the current debt situation, how people are getting into a whole lot of credit card debt. It's not just the nations that are insolvent; it's also the American people that are becoming, entrenched in this debt-based system. And this can kind of pervert culture, even in some respect, where all this debt is being piled upon us, but then we have to go bankrupt. We have to do something that seems, that doesn't seem like the right thing to do, go bankrupt or not pay our debts, right? So how is this kind of perverting culture, and how do we stay level-headed and move outside of that perversion?
Well, the broad picture of what's happening right now is that the systems that are in place, in other words, the banking system and the governments of the world and the big corporations, are all over indebted and they're trying to convince individuals to go into debt in order to increase economic growth, which increases corporate profits, which allows the CEOs of these big companies to pay themselves big year-end bonuses and allows congressmen and senators to get reelected. So they're all very interested in creating a country of debt slaves. Basically, they want to get us as deeply in debt as possible, and in that way control us, and which would be to say keep us in debt for as long as possible, paying really high interest rates and late fees and things like that to prop up the profits of the credit industrial system. A growing number of people are starting to figure out that that's the game. You know, they're working hard, sometimes at 2 or 3 jobs. They're still not quite making ends meet. They're having to go into debt to pay the basic bills. You know, not even for nice vacations and big cars anymore. It's you're feeding your kid by putting it on plastic. And a growing number of people are starting. You're seeing it in polling, where pollsters go out and ask people what they think of the economy, and a growing number of people are saying the economy is trash. It's really bad. My life is much harder, and that is deeply confusing to the establishment. You'll see somebody like Paul Krugman, or basically any major politician out there now, saying people are just ignorant. They don't know how good the economy is, and the reason people see more clearly than these politicians and economists and New York Times columnists is that those guys, the elites, are doing just fine. They're making plenty of money. They're paying their bills with no trouble. Their stock portfolios are going up. So to them, the economy is excellent. But to a growing number of people who aren't in that 1%-ish class, it's getting harder and harder to pay the basic bills. Debt is piling up, and they don't see any way out of it. Because, once you've got credit card balances that are charging you 25%, there really is very little way out of that, because the credit card balances will grow faster than the average person who built those credit card balances up in the first place is able to pay them off. So it's like being locked into a relationship with a loan shark, where the interest is so high that what you owe goes up, even if you're paying it a little bit each month. You're paying on it, paying all you can, but each month the bill gets bigger because the overall balance gets bigger, and the interest rate rises if you miss a payment or they decide they don't trust you anymore. So basically they're turning you into a serf. Growing number of people see that, and something called the trust horizon starts to shrink. In other words, in good times, we trust the big systems, and we think the supranational organizations like the WHO and the World Bank and the United Nations are doing a good job, and they're on our side. And we definitely trust the Federal Reserve and the big banks and the federal government. In harder times, we stop trusting those guys because they're clearly not taking care of us. And that's what's happening right now. You're seeing a dramatic shrinkage of the trust horizon of the average person. That's leading them to vote populist and to really put their trust in like local farmers and the guys running their town, the mayor and the city council, because they can meet those people. They can kind of get a sense of who they are, and they can see the results of their policies right there, on Main Street. And when that happens, that changes the political culture in a really fundamental way. Because if you don't trust the congressmen and the senators and the guys running JP Morgan Chase, you are going to take political steps that they perceive to be against their interest. And that's where we got President Trump, really. He's basically a middle finger to the big systems out there that people decided they didn't trust anymore. And you're seeing that all around the world. People are starting to vote for populist candidates who used to be considered fringe. And now they're the second most powerful party in Germany, or the next prime minister or president of France, and possibly the next president of the United States. So that is a a political catastrophe for the elites, and they're responding to it with basically throwing the kitchen sink at anybody who opposes them. So you're seeing what used to be kind of soft authoritarianism, where they would lend you money and then you could buy a bunch of stuff, and it was only later that you found out you were the slave of the guys who lent you the money. Well, now they're coming right out with it. They're censoring social media, and they're using the legal system to indict and hopefully, from their point of view, convict politicians that stand in their way. So it's changing political culture from top to bottom. The peasants are no longer trusting of the aristocracy, and the aristocracy has taken the gloves off, and they're just going to impose their will now. So we've got a really interesting, in the Chinese curse sense, decade ahead of us in politics, because it's not clear how this plays out. It's not obvious how the people who are deeply in debt right now are going to get out of debt, and it's not obvious that the elites running the country right now are going to let themselves be kicked out of power and replaced by populists who they don't think understand the world in any meaningful way. So I don't know where this leads, but I think it could easily lead in some really dark directions. And that is what you get when you adopt a fiat currency. You start borrowing incredible amounts of money, you start encouraging regular people to do the same thing, and then those people stop trusting you. This was predictable from day one back in 1971 when we got rid of the last vestiges of the gold standard. And it took a really long time to get here, but we have arrived at this really predictable place where the Fed's in a box, its tools don't work anymore. Nobody trusts the other guys who are in charge, and politics are becoming kind of warfare by another name. So we're on the verge of a civil war in a lot of aspects in the US and in a lot of places in the rest of the world. And I don't have the slightest idea how this plays out exactly.
Do you think that with respect to the debt issue and what we're seeing in Japan, could that be a little window into what the US is headed into?
Yeah. Japan is a good example of where we are headed. And it's really not that far in the distance. Basically, what happened with Japan is that they had their big financial bubble before everybody else. In the 1990s, they had a real estate bubble that was just epic. And so many zombie companies and zombie real estate owners were created by that. In other words, people who bought real estate at ridiculous prices. And then when the prices came back down, they couldn't manage the debt related to that real estate. They were going to go bankrupt. And the government in Japan could have let a whole generation of real estate people go bankrupt and just suffered through the deep, deep recession that would have resulted and come out of it in pretty good shape financially. But instead, they decided to try to bail everybody in sight out. So the government borrowed huge amounts of money, bailed out these zombie real estate companies, and just kept them shambling along for several more decades. And government debt has gone up to a place in Japan where it's as high per capita as any other country has ever seen in human history. And that makes them very vulnerable because their interest rates have to stay very low, or that massive amount of debt, the interest cost on that massive amount of debt, will just eat them alive. And what's happening lately is the yen is starting to fall. See, this was the box that the Bank of Japan was always going to be in, and that the US Fed was going to find itself in sometime later. But right now in Japan, the yen is falling, interest rates are rising, and that combination will blow up the government's finances, because if the yen keeps falling, that's inflationary, and that'll push interest rates up even more, and the government will have to pay so much interest on its debt that it won't have anything left over for anything else. The military, for senior pensions, anything like that. It's all going to go to interest. And that means the government goes bankrupt. So Japan is headed that way at an accelerating rate as the yen falls and interest rates rise. And the U.S. is, because it's making a lot of the same financial mistakes, is headed for that same place where there's no solution to their problems. In our case, it probably won't be the dollar falling against other currencies, because all those other currencies have huge problems too. So the dollar might be relatively strong compared to the yen and the euro and pound sterling, but it might lose purchasing power at a accelerating rate. That's how it would be. Inflation would rise in the US. That would spook lenders who want a higher interest rate on money they lend. So interest rates would go up. And there we are. Interest rates are rising, threatening to bankrupt the government and all the other people in the country that have variable rate debt, while the dollar falls and while inflation increases. And there won't be any way to fix that, because if you try to fix one side of it, like if you try to prop up a falling dollar, in other words, make inflation go away, you got to do that with higher interest rates. Those higher interest rates blow up everybody's interest costs. But if you try to minimize interest costs by pushing interest rates down, then the dollar loses value at an accelerating rate. It starts to become disorderly, the decline of the dollar. And then you've got a financial crisis that points towards hyperinflation. We may not get all the way there, but we'd be heading in that direction. And the markets would be really destabilized by it. So that's kind of where we're headed. And it could be where we are right this minute. We'll have to see, because we've had our inflation, in which the dollar fell by 8.75% in 2022 officially, and probably 15 or 20% in reality. We've got interest rates starting to go back up again. And we got the Fed talking about, maybe we'll, the next thing we do might be a cut in interest rates. And if that leads to higher inflation, then we're off to the races. Then we're Japan 2.0 on a much bigger scale.
We just interviewed Alistair McLeod and also Francis Hunt, and they were both talking about how what we're seeing in precious metals right now looks different from other rallies that we've seen in the recent past, where it seems like a loss of confidence in credit itself, a loss of confidence in the system, because what we're seeing is actually the dollar rise along with gold, which signals kind of a fear trade right now. Your perspective on that, what we're seeing in precious metals? I know we're seeing a bit of a pullback right now, but it seems like there's a loss of confidence in the system, and that's what's driving the metals prices.
Yeah, absolutely. Because the big buyer now of gold in the world is other central banks, not the US or European central banks or the Japanese central banks, but China, Russia, India, countries that are looking at what the developed world is doing with its finances and concluding that we got a major currency crisis coming. So that in effect, they've lost confidence, like you said. They've lost confidence in the dollar-denominated global financial system, and they're buying gold as protection. And they're buying it pretty aggressively. The world's central banks were net buyers of 1,000 tons of gold in each of the past 2 years. And in a market where the mines only produce 4,000 or so tons, that's a huge new source of demand. And then in the US, something is happening that's very interesting at the big box stores. Costco and Walmart have started to sell gold and silver. And now it can be an impulse buy. You can go to Costco and while you're checking out, say, oh yeah, toss a gold bar into my basket while we're at it here. And apparently people are doing that. Costco is supposedly selling $200 million of gold per month, which is a couple of $1 billion a year. And that is a big addition in demand that didn't exist before. So it's clear that this precious metals bull market is linked to a loss of confidence in the global financial system. And to the extent that the central banks are shown to have no tools left to fix their problems. In other words, they have to choose one crisis or another, but they can't choose the path of no crisis, steady organic growth with minimal increases in financial burdens for everybody. That's foreclosed now. We can't do that. We either have to choose a deflationary crash like the 1930s or at a minimum, a currency crisis like the 1970s, but it could be a lot worse than that. So the central banks of the world who aren't in this box are watching the big developed world central banks flail around in there and realize they have no way to fix their problems. And those other central banks are buying gold aggressively. So yeah, I think that gold is being bought by people who have lost confidence in the system. And the higher gold goes, and the more flailing around the world central banks do, the more people will be in that position where they don't like what they're seeing. They're losing trust in the big systems, and they're going to protect themselves with gold. So it's possible that we reach a point in the not too distant future where an awful lot of global capital tries to get through that small door. There's probably 100 times as much investable global capital in the world as there is gold at current prices to satisfy that demand. So let 1% more of global capital flow into precious metals. And you've got, people will be talking about, it's not gold anymore, it's unobtainium. You just won't be able to buy it if you decide you want it at that late date, and you'll be wishing that you'd bought some now, or bought a lot now. So you kind of want to get out ahead of something like this. It's a fairly simple story when you just go from rising debt leads to rising inflation, leads to financial instability, leads to gold and silver going through the roof. That's really, those four sentences are basically all you really need to understand this world in a basic level. And so, I think the simplest thing for people listening to this and wondering what they should do about it would be just buy some precious metals, and then start looking at the other real assets that governments can't make more of, and see what kind of capital you have relative to those assets. And if you can buy some more, if you can buy farmland or a homestead or something like that, awesome. Look at what Bill Gates is doing. One of the richest guys in the world is now one of the biggest owners of farmland in the world, because he's been buying up farmland with his tech money for the last 5 or 6 years. You want to emulate somebody like that if you can. And then other commodities are incredibly cheap compared to financial assets. So historically, when copper and zinc and silver, if you call it a industrial commodity, when they get down to current levels relative to the S&P 500, to financial assets, they usually take off and have a nice long bull run. So it wouldn't have to be just gold and silver in the commodity space that have big runs. I think copper is a great story, and uranium is a spectacular story. And there are lots of other less well understood kinds of commodities that are going to be very big in what the technological future looks like. So mutual funds that buy critical metals and things like that might be interesting too, or might do really well in a currency crisis. So, there's lots of things you can do. This is an interesting investment thesis. It doesn't have to be the world is coming to the end of its rope. Oh my God, what am I going to do? It's okay. Instability is coming. We're going to see a lot of consequences for our past mistakes. We'll, do a monetary reset at some point. We will fix this problem. But in the meantime, you can profit from all the chaos that's going to ensue if you do this and this and this. And most of the prescriptions, most of the things that you want to do involve real assets that governments can't create more of. So create a commodities portfolio running from physical assets that you own in person out to physical ETFs that go out and buy those commodities, all the way out beyond that to the stocks of the miners, and spread it around cautiously, and decent chance you'll be in good shape as this all plays out.
Now, when it comes, there's the financial aspect of all of this, but you also mentioned how the political environment is changing. And it's interesting how, on certain platforms, we have to self-censor ourselves, and how we're seeing in the political sphere as well already elements of authoritarianism and certain politicians being, lawfare, they call it. Your perspective on that, is there anything that we can do to fight against that? Because it seems like it's kind of maybe a natural progression from this debt-based system. It perverts the culture, it changes the government. But is there anything we can do to fight against that?
Yeah, I think things would go much better and much more smoothly as we progress from, the breakdown of the current fiat currency system to some kind of a monetary reset where we go back to a gold standard or whatever, if we have the right people in charge. And those people would probably be the guys we consider now to be populist. Corporate Democrats and country club Republicans are not going to fix this because this is their gravy train. They're making money from this. So they're going to run this thing right to the very end because it's their job to do that. So politically, I mean, I don't want to get people's hopes up and think that one election is going to change things in a way that gives us some kind of utopia, because that's not going to happen. There's going to be a gigantic crisis involving all the debt that's been taken on. But that's not to say our votes don't count, because if we elect the people who are mistrustful of the current system, that's going to be very messy, but we'll have the right guys fighting for us. So you never want to fall in love with any political philosophy or any individual politician because they will break your heart. But generally speaking, if you look at people like libertarians and populists, that you'll have a better chance of getting somebody who, by and large, on balance, does things that work in your favor than if you just go back to business as usual. If you elect the Clintons or the Bushes again, or their cronies, put them back in power, or keep them in power, nothing good is going to happen. And one of the big reasons, one of the big differences between today's populists and today's elites is that the elites make money from war. The military-industrial complex basically decides where we should invade next. We go do that. We destroy the economy and the military of whoever we're invading. They have to rebuild by buying new weapons. We insist that they buy weapons from General Dynamics and Raytheon. Raytheon and General Dynamics then contribute to the political campaigns of the guys who started the war. That's a cycle that it risks destroying the human race if we don't stop it. So politicians that are at least rhetorically anti-war are definitely a better bet than the guys who are saying, "Oh yeah, we're the United States of America. We can fight 3 wars at the same time. Easy. We're the most powerful country ever." When you hear that kind of rhetoric, that guy is trying to enrich himself at your expense and at the expense of all the people that the military kills. So look for people who want to pull out of as many wars as possible. And, I'm not saying Tulsi Gabbard will ever be president, but she's a politician who mostly says the right things about the forever wars. She runs against Afghanistan and the Second Iraq War and the Ukraine War. And, if you can find people like that to vote for, that gives you a slightly better chance of having honest people with your interests in mind in charge as we go into all the chaos that is basically inevitable.
And if people are interested in following your work, they can go to rubino.substack.com, link in the description of this video. Do you want to share with our viewers what they'll find there?
Yeah, that's a newsletter that focuses on actionable ideas for dealing with what's coming. I do post some stuff on the evolving financial crisis, but I focus more on what we can be doing about it, like what portfolio of commodity stocks would be the best, and how to make yourself as invisible as possible to the censors and the surveillance capitalist countries, things like that. And so far, so good. It's been out for a year, and there's an interesting community coalescing around it.
All right. Well, thank you so much for your time, John, and God bless.
Thanks. You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 29th through May 6th, 2024, while supplies last. First, we feature 2023 1-ounce South African Silver Krugerrand at just $3.10 over spot. Next, backdated 1-ounce gold Australian Kangaroos are only $59 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.